Good afternoon and welcome to Markets Today. I'm your host, Mbithe Mwema. Today is a very exciting day. At least I hope it will be exciting for you as it is for me. We are talking about presumptive tax and turnover tax. What do these taxes mean? What does the law say about these taxes? And more importantly, what are you so expected to do in as far as the Kenya Revenue Authority is concerned? With us in studio, we are joined by Monica Githuba. She is a tax expert sitting in the Domestic Taxes Department at the Kenya Revenue Authority. Welcome to the show.
Thank you.
Now, offline, we were discussing what these two taxes are. So let's just start at a bare minimum. What is presumptive tax? What is turnover tax?
So presumptive tax is a tax that is based on the business permit. So most businesses in Kenya will get a business permit from their council government, and then they'll pay a fee. For example, they'll pay maybe, let's say, 10,000 for a business permit. So this tax is at 15% of that business permit, and you pay it via iTax on the iTax platform.
Okay. Yeah. So every beginning of the year, I go and apply for this business permit, and then from this year, automatically there's a 15% that is loaded up to show. And does this apply for all businesses?
The businesses that have turnover, an annual turnover of 5 million and below. So that means that your sales, your actual sales without deducting any expenses, that's what we call the annual turnover. So if it's 5 million and below, then you qualify to pay this tax.
To pay this tax.
Yeah.
Does that mean if I run a sole proprietorship, a limited partnership, a private partnership, or a limited company, does that mean that all these businesses are liable to actually pay for this presumptive tax?
Not really, because presumptive tax is targeting the starter, the informal sector. So it's sole proprietors.
Sole proprietors.
Yeah. So if you have incorporated your company, then SKRA, we assume that you are now formal, and now it comes with the law. So there's a company law to observe. You have to prepare books.
Yes.
So you have now formalized your business.
Okay.
Yeah.
So this is for, as we call it, the hustler.
Yes.
So labda nikitoka kazi na uzanga mayai crate moja ama mbili to my neighbors ama mandazi.
Yeah.
So that business that is not, it's not really formalized, but it's ongoing.
Yeah.
And at times, if maybe I'm in these stalls in the Nairobi city, the business district, or if I'm in downtown, or if I have to pay for a stall, as long as I need a business permit, then I am liable to pay for this tax.
Yes.
And this took effect in January?
Presumptive tax was there in 2019.
2019.
So that's when it was first took effect, but now it's still valid even now.
So it was deductible last year,
yes,
and it's also deductible this year.
Yeah.
All right. And then what is turnover tax then?
So turnover tax is still a tax that caters for the informal sector. So it's a simplified form of taxation. So this is at 3% of your monthly sales. So let's say as a business you've sold 100,000 in a month. So we take 3% of that, and you pay that as tax. So you can see it's really simplified, because you don't need to do a profit and loss account. You don't need to look at expenses. Just need to look at, this is what I've made in this month. And then by 20th of the following month, you make a payment, and you make a return and then make a payment.
Okay. Yeah. So this law, first and foremost, let me just take you back to the fact that it has been articulated in the Finance Act 2019, which was ascended into law in November. And in that act, one of the issues that we've had people ask is, okay, fine, the Finance Act says that turnover tax and presumptive tax are liable. Kenya Revenue Authority says that the start date for this, especially the turnover tax, is 1st of January 2020. Are there regulations that help me understand who is liable to pay for this? Do I qualify to pay for this, or am I exempt from paying from this?
Yeah, so when the Finance Act becomes law, then now it's upon KRA to implement this law.
Okay.
So KRA comes up with guidelines on how to go about TOT. So this is the work that has been done, and part of what I'm doing right now
is educating the public.
Those procedures.
All right. Yeah. Because based on that, when we look at the Finance Act, it does say that a couple of businesses are actually exempt from the turnover tax. So businesses that earn rental income, businesses that are in the management or professional or training fees, that's how they earn their income. Then the income of incorporated companies, or any income which is subject to a final withholding tax under this act. Now, do these businesses then write to KRA to seek an exemption from this law, or is it an automatic exemption?
Now this one's there's no need to, because there's no need to come for an exemption from KRA from this, because you now just file your annual return.
Okay.
It's like now if you're employed, you'll be required to file your return at the end, by June.
All right.
Or after 6 months after the accounting period.
After the accounting period. So
companies.
for this ones, it's automatic.
Yes.
You don't need to do anything.
Yeah.
Okay. Then now let's come back to the defining what kind of businesses are liable. I sell mandazis, or rather our colleague was eating mandazis earlier before we came to the show. I don't know why he didn't bring for us, hopefully next time.
Yeah.
So I am in a bus station. I sell, this one who sell mtumba clothes.
Yeah.
Kila 50 bob, ya bei ya jioni 100, tunauza. There are those people who are in the open air market. Are these people supposed to pay turnover tax?
Yes, they are, because I'm sure they're doing business, legit business in Kenya. So the essence is like it would be good for anyone who is in business to keep certain records. Like what have you bought, what have you sold? So it's even good for your business. So
how do you keep these records, Monica? I'll take you back to the conversation we had. Let me even just put in a bit of Swahili. Monica, nauza mandazi, si ndio? Nimeenda nikachukua mafuta kwa mama pima. Si ndio? You know, people normally, you don't, in that scenario, in the informal segment, it's not the way you go to Naivas and buy a tub of Kimbo to cook, where you get a receipt on your way out. Here you go and say, leo nataka mafuta ya finje. So I want oil worth 50 shillings. Then you go to the person next door, nipimie vikombe viwili vya unga wa ngano. For example, I'm running that kind of business. So it's very, there are no receipts, account keeping, honestly. There are really no accounts. It's like the grocer, that's why you say this entrepreneurs, when he leaves, the business is shaky. Because he's the one who knows, nilitumia 50 bob asubuhi, nikatumia saa 2 jioni, pesa ikikuja hata akubaliangi waiter achukue pesa, unalipanga on your exit. How does this person account and go to the KRA website and tell you that this is how much I have sold, this is how much tax I owe you?
You know, now, like when you operate a business in Kenya, there are certain laws that you will have to follow, because now you'll be required to declare the income you've earned for that period. So it's just to encourage business persons that it's good for you. Like what you buy, even if it's that mafuta and you didn't get a receipt, you can get an exercise book and start keeping certain records.
So how would I keep it?
It shows, like you see now, for the good thing about turnover tax is it's just 3% of your sales. So let's say is at least even the local shop that we buy from, you would find that the shopkeeper has a notebook where they note.
So I have a place where I say 1 egg, 20 shillings. Oh, no, for example, like at least I have seen people who buy the A4 ledger, actually the single ledger. So it's better to use that as a reference. Okay, fine. So then I use this as a reference from the 1st of January, and I've been doing that till the 31st of January. Maybe I have 31 pages. What do I do next?
You just total it up, because those are your sales now. And then you go to iTax and you declare that as a sale. And
how would I do this? So if I go to the KRA website, I go to iTax. If I'm not registered as a business, I have my individual PIN. Am I going to use my individual PIN to be able to generate a tax return?
Yes, because now you are a sole proprietor. So as a sole proprietor, you're either employed or in business. So if you're in business, you might maybe have a business name that you've registered with the county council, and maybe at that point you paid some presumptive tax. So when you come to file the monthly turnover tax, you will fill in the details. This is the amount I got. Then the system will just calculate the 3%. And then you will be able to generate a payment slip.
A payment slip.
Yeah. So that payment slip is like the slip you go with to the bank, and then you make a payment. Yeah.
And then when Monica comes to my shop after she's had my nice tea and mandazi, and she asks me for my records, will she accept my books as my records?
Yes, because those are the books you're keeping, and then you can be able to explain, due to the nature of my business, these are the records I'm able to keep. But of course, with time, we expect that you go for more, so that you start buying from maybe people who are issuing receipts. You keep those records, and for your own good, because now you will need, even like when you maintain those small nice books, it's good for you to see, am I making a profit, am I making a loss, and all that.
Is there a law that I need to look out for, at least to show me the kind of records that you as the Revenue Authority expects of me?
Yeah, the Income Tax Act and the Tax Procedures Act
The
requires
Tax Procedures
businesses,
Act.
to keep proper records. And proper records means that these records are, they have the correct details, they have the PIN number, they have the name of the buyer or the seller, and all those details. The amount clearly stated. Yeah.
Wow.
Yeah.
Here's another question. Let me move from the person who does the mandazi. Let's move to maybe this person runs an events company where they host weddings or they host, not conferences, people who have bridal showers, or these things that people like to do on Saturday, Sunday, or birthday parties. And they probably do it on the side. It's sort of a side hustle.
Yeah.
And typically what you find with such businesses, they're not too big, they're not extra small, they're more on an ad hoc basis. They tend to hire an accountant on a monthly basis to come and check what their records are and help them make the proper filings to the KRA.
Yeah.
For such a person, what are the key things you tell them to have always at the top of their mind when they're thinking about their tax return so that they're never caught off guard?
I think proper books of records, because then now it will show you had an event at this date and this is what you charged. So you're keeping some record. You maybe get even an invoice book, because I'm sure you can get an invoice book that is not too expensive or too complicated, that just keeps records, because we will come and check the tray of your records and see, is this adequately supported? If it comes to the point where KRA now needs to check your returns, you will need to support what you've declared. And now records are the true speaker.
That's the true speaker.
Yeah.
Okay, you're making a lot of sense. I'm just trying to think of the other side of the implementation process on a day-to-day basis, but maybe that's a conversation for another day. Then the other question that we've also had coming across is this. So fine, I have paid presumptive tax. Is presumptive tax only paid by sole proprietors, or is it a tax that could possibly be paid by limited liability companies?
Now, the law specifies that limited liability companies are not liable to pay presumptive tax.
Okay.
So when you pay the presumptive tax, let's say you pay like 750 shillings, 15% of your business permit is 750.
Okay.
Then when you come and file your turnover tax return, you will pay less that. So if you're to pay 1,000, you'll pay now 1,000 minus 750. So you don't need to know now. The system is such that it calculates for you.
So the system will calculate.
Yeah.
Okay. Yeah. But does that mean that if I go and renew my business permit and I'm expected to pay a presumptive tax, then automatically I qualify for turnover tax? Is that a conclusion?
Yes, that's the conclusion, because everyone every business person who is operating as a sole proprietor and has a turnover of 5 million and below qualifies for both turnover tax and presumptive tax.
But what if I'm a limited company, but then I've just started? Of course, my revenues are not 5 million.
Yeah.
What if I registered maybe a year or two ago? I had an idea. I registered it as a limited liability company, but I'm still in the process of back and forth trying to see and test my concept and see how I engage with the market. And I've been in operation for 2 or 3 years, but I just haven't done 5 million. What does that mean for me as a limited liability company?
You just have to file the annual income tax return. So in this annual income tax return, we expect that you do a profit and loss account. So you just do, this is the sales I've gotten and these are my expenses. And for expenses, only expenses that you've used to derive this income will be allowed. So no personal expenses will be allowed at that point. So what happens when you incorporate a company is you form a separate body. It's like you form your moniker, but then I form somebody else called Company B. So me and Company B are two separate entities. Yeah. So I have to file my return as Monica and then still file the return of Company B.
Company B. Yeah. But what if Company B needs a business permit? Because I have spoken to some businesses that say, yes, we are registered as a limited liability company, but because of the nature of our business and where we are operating, we are required to get a business permit. So this person got a business permit in January. The business permit, they had to pay 15% presumptive tax. But then the law says that if you are a limited company, then you are omitted from paying turnover tax. What does this business do then?
As a limited company that gets, you see, all limited companies will maybe need a business permit from.
Yes.
So they don't need to, maybe that was a misunderstanding, because now
Okay.
it's an individual PIN starts with A00 blah blah blah,
Yes.
and a company's PIN starts with P00 something. So we expect that the ones who are paying presumptive tax are there.
The ones that start with an A.
Yeah.
So if you start with a P and you paid, what do I do if I've already paid then and it starts with a P?
Yeah, you can. Okay.
Okay. Maybe you can get a point of recourse.
Yes, you can write to the commissioner and request that.
Okay.
They gives guidelines on how to deal with that.
Okay, we
Yeah.
could write to the commissioner, but I want to assume that he's a very busy man, and I would not want to burden him with a refund for 750 shillings.
Yeah.
But that's a question for another day. Let's just take a quick break and see what your questions are. Engage with us on Twitter. That is Metropole TV or Bithe Mwema at Twitter. We want to hear what your thoughts or your concerns or considerations would be when you're talking about presumptive tax and turnover tax. More importantly, do you understand what it is? And are you doing it? See you in a few.